We all earn money, right? And after earning, we all invest money in different areas, right? Today, I'll discuss how money can be utilized in a better way to get optimum or better return on investment. So basically, simple way to understand the financial market of India. But before get into this presentation, I like to clarify you that I am not a part of the financial market as an agent. Okay, I'm a common people like you, and by profession I'm a mechanical engineer working in manufacturing industry more than 2 decades. If we talk about the structure of Indian financial market, it comes definitely under government of India, but it has got two part. One is under Ministry of Finance, another is under Department of Affairs. And under Ministry of Finance directly there is SEBI, Security Exchange Board of India, and RBI, Reserve Bank of India. Okay. Now in financial market there are basically three heading, you can say. One is security market, another is forex market, and another is derivative market. And security market is further divided into two. One is the capital market, another is the money market. Now when we deposit our money in banks, so banks definitely that invest those money into some companies or some other business, and that business get profit, and some proportion of that profit distributed among those who are indirectly invested. Now if we see the which kind of market, actually how much share is holding on an average, or which kind of market is the maximum or minimum, the money market has got the highest market share in India, then the equity derivative, then forex market. Fourth is the equity market, which as a common people you know that share market, then government security market, and the corporate bonds. Now different assets is called asset class technically, and it has gotten on an average return on investment. Say for example in equities, on an average return on investment is 15 to 12%. In gold, if we see the statistics of last 10 years, 15 years, or maybe projection of next 5 years, it is on an average 6%. Real estate close to 7%. Bank FD and all this, now it is 5%. Earlier maybe 2 years back it was 6%. Okay. Now in debt market and equity market there are basic differences, there are advantages and disadvantages, or the plus side or minus side. For example, in debt market, when you are depositing money in banks, this is a protected, actually, like it is a guaranteed return, but it will not grow anything more actually which was committed. But in equity market it can grow like anything, but it may not grow also. So risk is always there in equity market. Okay, so now in debt market, if you invest you can earn maximum 6%. Okay, and at the same time the inflation rate in India is more than 6.5%. So in simple way, if you are investing money only in banks, FDs and all this, you are basically losing money at the end of the year, right? And who regulates this money market or secondary markets? The money markets is regulated by RBI and SEBI, and secondary market is regulated by BSE and NSE. BSE means Bombay Stock Exchange, NSE means National Stock Exchange. And other than that, there are regional stock exchanges like in almost all state capitals like Kolkata, Jaipur, Hyderabad, Delhi, Guwahati. They all have their own regional stock exchange. And in a simple way, like which bank has got the maximum market share at this moment, or the financial institute, because we need to know these are basic information so that we can invest our money wisely and safely actually. SBI has got the highest market share, then HDFC, then LIC, Life Insurance Corporation of India, then ICICI, then Axis Bank, and there are many other actually. These are the major 4 or 5 player in the top. Now, if we talk on return on investment versus risk, like if you have a liquid fund like cash, then go debt fund like FD and all these things, then balance fund, index fund, equity fund, and sectoral funds. So liquid fund, it has got no risk and return on investment is also less. Debt fund has more little higher risk and return is also more. Simple way, like equity fund, it has got a higher risk but return can also be much higher. So there are areas where you can invest your part of money which has got risk, but at the same time there is a chance that you can got a lot of money actually. Nowadays, this mutual fund is one of the things everywhere you will find people are discussing, even investing, but many people doesn't have basic understanding what is mutual fund actually. Mutual fund is nothing, it is basically some company, say a bank, they collect the money from common people and they gathered money in a big amount, say 500 crore, 200 crores, and then they invest those money in a industry, and that is controlled and regulated by very specialist group of people in the authorized financial market. Okay, say you have a mutual fund, name something SBI hybrid something. It means that those who will be as an individual investing 50,000, 1 lakhs, 10,000, 20,000, SBI will gather all those money and then invest those money into some, that money also divided into a few divisions. Some is more risk market, some is guaranteed market. So this is basically you are investing in some company through some banks or financial institute, that is mutual fund. You have no control when you can sell this and when you can buy this. Control is through the banks or some financial institute, that is the mutual fund. Unlike the share market. In share market, if you want you can sell it today, if you want you can buy it today. And mutual fund is basically share market but through some financial institute or banks, etc. Okay. And there is one thing, basically this share market or financial market, what they do, how they predict that you will have a good investment, return on investment. Basically it is statistical data which collects by people, and nowadays all apps comes in mobile phone, and you can see which product is going, financial product is improving, which is declining. So accordingly you can invest by yourself as well. So it basically some statistical data backup. And many developed countries like robo advisor has already working in financial market. So it is basically there is no interference by human, it is all by the purely by database, and it is operated by a intelligent automatic robo actually, who can advise according to your profile, according to your requirement, how much money you should invest where. So this kind of advancement is also automation, robotics, and data engineering also comes in financial market as well as. So if you find this presentation is interesting and good, you have got some information, you can subscribe my channel, and you can, so that you can get the notification for my future presentation. Thank you so much.